Wonderful. Good afternoon, ladies and gentlemen. Thank you very much for joining us today. It is indeed our pleasure to welcome you to the knowledge series, the Women in Finance Group Nigeria Knowledge Series. I just want to start off by telling you a bit about the Women in Finance Group. For those of you who maybe this is your first time joining us, the Women in Finance Group was founded in 2020 by Ms. Toyin Sonny. The main objective of the Women in Finance Group is to promote the influence, skills, knowledge, and innovation among women who work in the finance industry in Nigeria to ensure that we make significant contribution to, creating wealth in Nigeria and moving Nigeria forward as a whole. This portion, the knowledge series, is an activity that we do to actually help to improve skills of our members and the industry at large. It is a program organized by the Education and Programs Committee, of which I am the chairman. So my name is Bumi Lawson, and I am the chairman of the subcommittee, Education and Programs Committee of the Women in Finance Group. I'm a second vice president of the Women in Finance Group. And we've had a number of webinars to actually help to improve capacity within the industry, have networking engagement amongst our members as well. But this one today I'm really excited about is a technical topic on private equity and venture capital. And we have two wonderful speakers here today. But before I go on to introduce our speakers, I will first want to hand over to Mrs. Toyin Sonny, our chairperson, to give the welcome remarks. Thank you very much for joining us, Mrs. Sonny.
Thank you so very much, my dear BL, as we call you at Women in Finance, for the tremendous work that you are doing as chair of this very important committee. As we can imagine, capacity building is one of the critical building blocks for us at Women in Finance. And the role that you play, I'm sorry, ladies and gentlemen, can you hear me?
Yes, we can hear you.
Oh, fantastic. Okay, because I just saw some indication that I was being connected to audio, so I got scared. Does that mean I had not been connected to audio all along? So I want to thank you, Mrs. Bumi Lawson, for the great work that you, Dr. Ola, Ojone, and others on this excellent committee are doing. And I am particularly thrilled that we have such eminent, well-spoken, well-read, and experienced industry players who are going to be speaking to us today. I know you will give a more detailed introduction to Dr. Enelama, Dr. Oke Enelama, and our own Dr. Ola Brown, who is also a member of Women in Finance and a member of your committee. I welcome everyone who has joined us from all across the world for today's knowledge series. I have no doubt in my heart that our speakers have prepared themselves and they will be dishing out information, inspiration, and direct experience that they have in this field that can only improve our knowledge, our understanding of private equity and venture capital, and will also improve us both as entrepreneurs, which I know many of us are, as operators in this space, and as advisors. And I must say that I am aware that in the first half of 2021 alone, private equity across the world has raised close to $500 billion for investors. And in a post-COVID world, I'm hesitant to say post-COVID. I probably need to adjust that and say in a COVID world, because every time we think that we are going post-COVID, we find ourselves smack in the midst of another wave. So in a COVID world, where investors have become weary, where a lot of value has been lost by disruptions to both demand and supply chains across the world, where there's a need for significant investments in the sectors that we need to catalyze recovery of our economies across the world, sectors like the healthcare sector, sectors like pharmaceuticals, sectors like logistics, sectors like infrastructure, sectors very importantly like ICT, where we have not just women, men and women investing and looking for critical long-term funding for their play in this space. There is a need to know what are our options. Traditional financing methods and avenues have not been able to meet the need for long-term patient capital. Women in particular struggle, find it doubly hard than their male counterparts across the world to raise critical funding for their businesses. What role can private equity play in meeting these needs? How can we as entrepreneurs, female entrepreneurs, which I know many of us are, and also women in the finance sector, how can we deploy the solutions that private equity and venture capital offer us into meeting the needs, the critical needs of development that we have across Africa and the rest of the world? Those are some of the questions that I have no doubt in my mind that our eminent speakers today are going to be speaking to and answering for us, such that we can deepen, which is one of the cardinal objectives of Women in Finance, such that we can deepen access to finance, such that we can build capacity in this industry in which we play in both the public and private sector, and such that we can help women to fund their business initiatives and objectives. Those are some of the needs that we're hoping that we will meet today. As I round up, Women in Finance exists to advocate for the issues that affect women in general, but specifically women in the finance sector and women in finance roles. We exist to develop capacity. We exist to provide linkages and networks for women who want to build their impact and build their brands, even in this space and in this industry. And of course, we exist to empower women financially. On that note, I'm going to hand over back to our very wonderful chairperson of the Education Committee, Mrs. Bumi Lawson, and also second vice chair of Women in Finance, Mrs. Bumi Lawson, to lead us into the panel conversation. Thank you, Mrs. Lawson. And thank you once again, ladies and gentlemen.
Thank you very much. Thank you. Thank you very much, Mrs. Sunny, for that warm welcome and introduction around the topic and why it's important, and very important, especially in these recent times. I'm sure a lot of us have read in the press a lot of the funds that have been raised, particularly in the fintech and the financial services sector. And that's what makes this topic really of interest to us. So thank you very much for that. So without much ado, let me go on to introduce our speakers that are here that will be sharing their knowledge with you today. Our very first speaker is Dr. Oke-Enna Lama. He is the chairman of the African Capital Alliance Group, a leading independent investment management firm that sponsors funds and manages investment across a variety of sectors in sub-Saharan Africa. He also served as the Federal Minister of Industry, Trade and Investment in Nigeria between November 2015 and May 2019. Prior to his appointment to the Nigerian government, he was the CEO of African Capital Alliance. And African Capital Alliance is one of the very first private equity firms that we've had. They also had subsidiaries that included SME Manager, the leading firm that managed the SMILE scheme, which was a fund that was set up by the banks to be able to invest directly in small and micro businesses. I will tell you, in my own past career too, I've been involved in two of such. First, with VLA, I think we were the very first exit under the SMILE scheme. And the second time I was involved with them was when I'm as Action, they also invested in Action, and that also was a profitable exit. So we have a long history with Dr. Enal Lama, and his firm has really truly transformed a lot of companies, SMEs that prior to then were not able to raise patient long-term capital. He was able to bring that in. Dr. Enelama started as a medical doctor, and the interesting thing also is that both our speakers are actually medical doctors, fully qualified as medical doctors, but they also then ventured into the world of finance. Dr. Enelama has years of experience in private equity from Sapphire Management LP in New York and Johannesburg, South Africa. Prior to his career in private equity, he worked with Arthur Andersen in Nigeria and London, and Goldman Sachs in New York and London. Please welcome Dr. Enal Lama to this engagement. And I can assure you that he's going to share his wealth of experience. And the our second speaker is Dr. Ola Brown, the founder of Flying Doctors Healthcare Investment Company. FDHIC invests and operates across the African healthcare and wellness value chain in Nigeria. To me, it's the very first Flying Doctors initiative that we have in Nigeria, if not Africa. And she has actually made tremendous impact in the healthcare sector before then moving into venture capital. She has a certificate in public-private partnership from the Harvard University in project finance, and a public-private partnership professional certificate from the New York Institute of Finance. If I keep going on about her qualifications, we would finish today, but she studied medicine and surgery at the Paul York Medical School, after which she worked with acute medicine in the UK. She actually did practice as a doctor. Then she went for a master's degree in finance and economic policy at the University of London. Thank you very much to both of you for accepting to speak today. We will start off with Dr. Enal Lama, who would share with us his thoughts about private equity and the role women can actually play in that industry. Thank you and welcome, Dr. Enal Lama.
Thank you very much, Bumi. I trust you can all hear me. Bumi, you can hear me, right?
Yes, we can hear you. Thank you.
Thank you. And thank you, Mrs. Toyin Sani, for this great undertaking of bringing our women together in Women in Finance. I want to thank Dr. Ola as well, who is a dear friend and somebody that is doing very well in this field, and I'm glad that she's going to be speaking. So I will start and then I'll hand over to her. My understanding is that I'll give an overview, sharing my experience. Fortunately, Bumi herself has pointed out that we've actually had on at least 2 occasions worked together successfully. So I'm glad that in many respects, we're dealing with an industry where we've had relevant experience. And what we'll be sharing with you is more the experience than the theory. And hopefully, we can then go into a more interactive session. So with your kind permission, I'll share my screen. I have a few slides I want to use to share my experience. Yes, and I take it you can see my screen. Yes, so thank you again for having me. I'll just use these few slides to share my experience. Let me start by just talking a bit about ACA and the journey. In terms of sort of the continuing businesses we're in today, we've been sort of in the private equity business where we've done a series of funds and the real estate business. Like Bumi said, we also were in the SME business specifically with the banks when that program ran in the first 10 years of 2000s. But that program was discontinued, and we also decided that it was better to focus on private equity. But as you know, definition of SME varies, but we can talk more about that as we go on. We are also in the asset management business. So far, we've raised over $1.2 billion in these continuing businesses, and invested in over 45 companies. If we add the SME ones, I'm sure we probably will be closer to 50 something, if not 60. And we've had experience of over 20 years doing this. So we've had our successes, we've had our challenges, and in many respects, we'll be happy to share with you what has worked and what doesn't always work. That's really what I want to take out of this slide. Being pioneer comes at a cost, but it also comes with its benefits. And we have seen both work out for African Capital Alliance. I'd like to go back to the global market, just like our convener, Mrs. Tony was saying, Sani was saying. This is a very well-established industry now. I think it's fair to say that private equity has come to stay. Very successful in the more mature markets and increasingly successful in Asia, in other parts of the world. And in Africa, I'll come back to Africa. In Africa, we've also made real progress. Just looking at some of the latest reports from the first half of this year, you have over 6.5 trillion. Just think about that. That's a huge amount of money under management by private equity, or what they call private markets, which means all the alternative investments, investments that are not in stock markets and portfolio management. And you have over 3,100 buyout deals done in aggregate in 2020. That was what, over 500 billion, but almost $600 billion. And if you deal with global fundraising for 2020 alone, it was close to $1 trillion. And even at that, it was less than 2019, which was over $1 trillion. What are the principles that have underpinned this, quite successful industry? What is this collaboration? If you ever had a partnership in business, I think private equity will qualify, and venture capital. This win-win proposition, this idea of focusing on long-term and wealth creation. I'm glad that Bumi mentioned this when she was presenting. I can't emphasize enough the importance of alignment of interest, and because when this doesn't work, it creates all kinds of friction. And of course, the corporate governance is very important, and this results orientation, just being able to deliver the results in a way that is credible has been the hallmark of this industry. Let me now come back to Africa, and we believe that the opportunity still exists for private equity in Africa, and particularly if you focus on this theme of growth and the theme of long-term impact, and you will find that so you will find that whereas the development finance institutions may have started the investment drive in terms of the investors who have invested in the industry is quite diverse these days. I'm glad that Dr. Ola will be presenting, because her own investors and how she's gone about it has actually been quite innovative. And I happen to know that she's done very well, both with individuals and with institutions. And I'll be interested in hearing her story again. And there are over 150 active fund managers across Africa today doing deals at different sizes and different sectors and different markets, different geographies. West Africa continues to be an important market, and Nigeria, of course, is the largest market within that. And 68% of the value of the deals and 55% of the volume of the deals that was done in 24 to 2019 came out of this market. In terms of Africa itself, we've raised over close to $20 billion in the last 5 or so years. If you start from 2014, maybe closer to 7 years. And if you look at the sizes of funds, the median is around $140 million. Things slowed down during the pandemic year, but I think things will pick up again. You can see on the other side, on my right-hand side, just the distribution of the PE deals that were done between 2014 and 2019. What is it that we bring to the party? What is it? What makes private equity to work? And I think really, if you cut through it and you get to the basics, these are things which I'm sure many of us on this platform know already. It starts with what you invest in, buying right? Picking your bets, picking the partners, people, the business you want to be in, and of course, negotiating and buying right. But even more important, or equally important, is adding value. That partnership to make the thing bigger, because really what you're looking for is not a zero-sum game where there is no growth and it's a question of who gets more of what, but it's to grow the pie so that everybody does well, both the entrepreneurs, the investors, and the management teams that are involved in creating the value. And then, of course, for private equity to truly work, liquidity and exit is important. In other words, you have to be able to return, because in a sense, it's still asset management, right? You have to be able to return that money with a profit in a way that the investors can then, get the savings that are looking for, whether they're pension funds or other or family offices or whoever they are. And in all these things, this alignment of interest I talked about before is at the heart of it. And this is something we continue to get better at. And I must tell you that, like, frequently there's tension in this. One of my mentors and partners of, some of you might know, Dick Kramer, used to say that, like, it's almost like a marriage. You have to succeed in it the same way you have to succeed in your marriage, through win-win and thinking positively about the partnership as opposed to how one can take advantage of their partners. This slide just gets into, just how the private equity model works. And I won't go through this in detail because I know we understand it, that really you're dealing with a series of partnerships with investors, and partnerships with investments or investees, as we like to call them. And then the funds have become the partnership vehicles that pull those monies together to then put it to work. The funds themselves typically have these governance structures, the two most important being investment committee that decides on investment, and the advisory board, which typically these days will include the investors themselves. Times people call it limited partners advisory committee, LPAC. But I would say the fund manager really is the engine room, and the general partner, as in the limited partnership. And what you will find is that, like, the role of ourselves as managers is a fiduciary one. We must demonstrate that we are good stewards of the capital that is put in our hands, as well as even the business to partner with. It's also a form of stewardship, frankly. It's a fiduciary role, because there are normally many stakeholders in those things, not just the investors, even the employees and other people, when businesses decide to partner with private equity funds. So we take that responsibility seriously. And you find that the typical private equity house has, people with different and diverse experiences that come together so that they can then add value and work with these businesses. I talked before about the importance of the governance structures. We can cover some of this in the interactive session as needed. So as we continue, the other thing I want us to cover is, just what is it that we're looking for in as an entrepreneur? What do the entrepreneurs want when they go into a private equity deal? What is it that makes it work? One is access to patient capital. The entrepreneurs need access to patient capital, but they also need to understand that this capital eventually has to have a pathway to exit. I talked about the importance of value addition. Just being able to partner with the owners of businesses in a way that creates value for them and creates value for the investors that whose capital you're managing. And then, of course, those things that are catalysts for growth, introduction to new markets or new opportunities, bringing them into the community of other businesses we're in, so that that way, when we invest in a business, it's probably part of a community of investments, which, can do business with each other, can learn from each other, can grow with each other. That community, that theme of community is very important. And of course, African private equity and venture capital itself also increasingly is a community. Apart from the venture capital associations, the private equity and venture capital associations we also have, frankly, just other players who have come in. And again, I go back to our speaker today, Dr. Ola, who I just like the way she's come into the industry from, not just healthcare, but from social enterprise. And then she will tell you that she's also done technology successfully. So all those things mean that, like, this is a very robust industry. We talked about fintech. My friend just the other day sent me an article on how well Nigeria was doing in terms of fintech and attracting capital, and how some of these successful businesses are now valued more than traditional companies. So we must not be left behind, even of the technology revolution that is taking place. So what are the things that, that's one theme I want to leave with us today. And the real key is around, frankly, this issue of trust, right? And building trust-based relationships where there is mutuality of interest and alignment of interest and win-win. The model assumes that all parties will act in integrity. There's no point in my trying to take advantage of my neighbor. Of course, legal agreements are important, both for fiduciary reasons as well as for just, good housekeeping reasons. It's good to make sure the agreements are properly drafted and that the agreements are robust enough to deal with a variety of situations, including when things go well and in those unfortunate situations when things don't work out. I'm sure you've had recently where, some entrepreneurs have been up in arms about how they've been unfairly treated by private equity firms. Hopefully we'll talk about that some more today, because that's actually something that can be better managed, because I was taught many years ago when I was in business school that like when things go wrong, it gives you an opportunity, to show that, you're a good manager, or you believe in service, to walk your talk. It's not only when things are rosy, but what happens, how do you work out of difficult situations? I can't emphasize enough the importance of exit and liquidity. And the reason I say so is that like a good private equity model starts with the end in mind, just like any good plan, right? You start with the end in mind so that way you can get to that end. Because honestly, the biggest challenge we face in Africa today is this issue of liquidity and exit, and how to make sure that we have robust markets, to create that exit. Part of the reason why technology is doing well is that they have tapped into the global network when it comes to technology. The African market is not divorced from the rest of the technology markets, fintech and all this. And that's the best thing. And we need to think about private equity more traditionally. How can we become part of global? To the extent we are part of the global network, the better we do. Whether it's in terms of backing businesses that can go on to trade beyond their local markets, or attracting multinationals, or dealing with funds that come from outside Africa, including those that come from Africa as well. And then I talked about our role as fiduciaries. Then the final thing I would say is that, like, in addition to the guardrails you have, coming from the legal side, I think the relationship capital is very important. The relationship capital, the relationship equity, as we call it, is as important as the legal agreements, frankly. Here we start to get into the area of impact, right? Just to deal with, because as you know, these days, particularly for African emerging markets, this issue of impact has become very important. You can no longer just focus on the bottom line in terms of the financial returns, but investors, as well as even, let me call them other stakeholders, are interested in how we are part of what is going right. And this is particularly important when you're dealing with women in finance, because fortunately, one of the areas that most people now accept, and I'm glad I will have this particular initiative, and I want to thank Toyin Sani again, is that women play all kinds of roles that are very important, in making not just businesses work, but frankly, the kind of skills and competencies and wisdom they bring to things generally complements men. So any situation where you have being dominated by men, then we are selling ourselves short, and so you find that like in dealing with the economic gains, we also deal with what have been the impact of private equity funds. When we look at our example, African Capital Alliance, we found that we've created over 20,000 direct jobs and livelihoods, by those funds. You also find that like the male-female ratio in our workforce, while it's not at 50-50, it's trending towards 50-50. And, if we look at financial inclusion, we've reached over, close to 500,000 people. So all these things tie into the various SDG goals, the SDG goals of the UN and other, impact investors. This is just some case studies. I won't go through them in detail, except to say that gender is a very important thing that we followed, and we think that we're headed in the right direction. Both in terms of investing in female-owned businesses, in terms of some of the challenges that have been thrown by people like the DFIs, right? And I'm sure some of you would have heard of this 2 times challenge, about just trying to see the impact we're making in the area of women and in the area of sustainability, in finance. And then I've talked about job creation. Some of these examples we have here is just to relate the job creation to some of the investments we've made in Petra, which is an investment firm in Ghana that is into pension funds manager, Union Bank, which is a bank in Nigeria, most of us know, Film House, Accelerate. In all these places, we've actually taken time to look at the impact we've made in terms of women. And as you can see, they're all sort of in the 40s, trending towards 50-50, which is our minimum target. That's what we want to get to. I'm sure we can talk more about the role of women, but I just want to emphasize that that's something that we are also measuring and getting better at all the time. So this is just dealing with I've dealt with gender, I've dealt with work. This is now dealing with financial inclusion and climate change. I won't go through them in detail because we're probably not as focused on that today, but I wanted to show that it's the importance of measurement. Just measuring impact is something investors are now interested in. They call it double bottom line or multiple bottom line. And I hope that as we are measuring our impact, that we also will be part of maybe working with women in finance and other bodies, right, to measure global impact that we're making in Africa, so that way we're part of the global dialogue that is taking place right now. So we've dealt with some case studies here of what we've done in terms of managing exits and working with them and the role that family businesses have played. This comes from the point of view of entrepreneurship and some of the issues that have arisen. And we have many examples, like Bumi Lawson was saying, of businesses that have been very successful, right? Just working with entrepreneurs and seeing them. And these examples are not, one is from us. Equity Bank was done by other private equity firms in Kenya. And of course, Paystack is from the fintech industry in Nigeria. It's a well-known tech story. I'm sure Dr. Ola knows more about it than I do. I know I've used up my time, so I'll stop at this point, unless and then wait for the question and answer. So thank you for listening, and I hope this is helpful in terms of providing the overview as I've been asked to do. Thank you very much. Thank you. So I'll stop sharing my screen because I know that we have. Thank you.
Thank you very much, Dr. Okay. That was very insightful, especially as you broke it down into the impact on women. The questions are already coming in. If you have questions, please use the question and answer icon to type in your questions. We will take them after Dr. Ola Brown's presentation. So, Dr. Ola Brown, over to you. Thank you very much for agreeing to share your insights, experience with the team today. Thank you. Over to you.
Thank you, Ma, and thank you, Dr. Oke, for being here with us today. I sometimes forget, actually, that both of us studied medicine until Mrs. Lawson reminded us. So, yeah, wicked people will say that we left medicine for mammon, but I like to say that we left one form of impact for a different type of impact. And I'm glad that Dr. Oke also spoke a lot about not just the bottom line, but also the impact that investments in certain sectors can be, and how catalytic they can be in terms of jobs, how catalytic they can be in terms of the economy, and how catalytic they can also be in terms of their impact on women. So I'm going to give an overview of private equity and venture capital, go through some of the differences because I've done both types of transactions, and then sort of round it up by talking about women and speaking directly to our audience. And some of the members obviously have sent me questions over time. And we did a survey before we even chose this topic, so I know some of the things that people were concerned about and wanted to hear. And I'm going to try and do all of that in 10 minutes. So my name is Dr. Ola Brown. We've been introduced before. I started off sort of running an air ambulance company and later pursued a career in investment. I went to medical school and then did a whole load of finance things afterwards. And I kind of moved between finance and economics because my degree was in both. I worked with the NHS and this was a business that I started as well. So in terms of what I've been doing in PE and VC, I have 8 years of experience since we co-founded my first fund along with Mr. Bode Augusto, who is the chairman of one of Africa's first ratings agencies, and Mr. Dave Oduwanu, who is the CEO of one of the largest pension funds, Sigma Pension. So we went into this venture capital adventure together 8 years ago. And since then, we've done 11 deals. We've had 2 exits. All of our portfolio companies, bar one, have raised follow-on capital. The amount of follow-on capital raised has been 70 million, and the total valuation of companies in our portfolio is 200 million. And of course, we've invested mainly in fintech and healthcare. So we're the first institutional investors in Paystack. We invested in a media company called Tech Cabal, Helium Health, Lifestores Pharmacy, Real Fruits, MDAS Global, Cygen, Konico, Chisco Express. And I'll be talking, as I go through my slides, I'll be talking about some of these transactions specifically. So what is private equity? A lot of people on the call work in banking, traditional commercial banking. A lot of people on the call also work in other areas of finance. So I thought I'd start with sort of getting an understanding of what private equity is, which is, private equity provides capital to invest in unquoted companies. either companies that are not listed on any exchange or companies that are delisted as part of the transaction. They're usually delisted directly in the more advanced world. But here I see, the companies that I've sort of taken on that were once public, that we've invested in, have actually been out of AMCON. So it depends on the structure, the financial structure in the country. Private equity comes from high net worth individuals sometimes, we raised our first round of capital from a mix of high net worth individuals and from institutions. And the aim is to make us caretakers of their funds for a certain period of time. And the private equity firms make money by charging a management fee and then performance fees from the investments in the funds. And just a bit of history, I love kind of thinking about how things started. So the history of private equity could actually be traced back to 100 years ago. And it was when JP Morgan, as like the first LP, purchased Carnegie Steel from Andrew Carnegie for $500 million. And he took a share, and then Phipps went on, the partner went on to create a sort of private equity fund as well. But really, we started seeing the modern sort of private equity in the 1940s, and then growing into sort of more of an industry in the 1970s. But by the 2000s, I would say that it was fully established across the world as an asset class. And in terms of Nigerian history, we've just heard from the godfather of private equity. I was saying that when we're planning this event, I was saying that we're bringing the Jehovah of private equity to come and speak to us. And we're privileged to have him. So I'd encourage everybody to, ask questions. And, he's a very valuable resource. His time is very valuable. We're very, very lucky to have him here. So in terms of the history of private equity in Nigeria, Dr. Oke is definitely a big part of that. And just some terminology, because if I go into explaining and I just say GPLP, exit IPO, then people might not be sort of au fait with those terms. So the GP is an entity that raises capital from limited partners and determines which assets that the fund should invest in. So the GPs are the people that basically run the fund, whereas the LPs are people that commit capital to the fund. So if I go and meet a variety of people, they'd all be my LPs, and I'll be the GP because I'm managing the fund. Carried interest is a general partner's share of the capital gains from a fund, and I'll explain that a bit later. And then VC terms, seed, pre-seed, Series A, Series B. I'm sure we've all heard of those different terminologies before, the bridge rounds, etc. So those are the different rounds of funding. Usually the pre-seed is the first money that the company gets, and then there is a seed round. Early stage is usually describing seed or pre-seed, whereas beyond Series A is usually a later stage fund. And there's different types of venture capital funds. So we specialize in doing pre-seed and seed, but there's some larger funds that do Series A, Series B, and you'd see mega funds like SoftBank doing Series D, E, F, because they have a lot more money. So it really depends on sorts of venture capital firms generally have a stage. Some are stage agnostic, but usually in Nigeria you see pre-seed and seed stages, indigenous, and then the larger firms internationally come in after the pre-seed and seed stages and usually take Series A, Series B, although we do have some Series A local investors as well. The lead investor is the investor that makes the largest investment and leads the round, so to say. And then exit is when the investor sells the equity in a portfolio company. An IPO is when you take it to the public markets, and you've seen that we've seen local IPOs, but more popularly we've seen the international IPOs like Jumia exiting the investors by listing on the American Stock Exchange. A unicorn, we're all familiar with that term, and yesterday the news came out about OPE becoming a unicorn valued at raising $400 million, valued at $2 billion. So they're one of still Africa's first unicorns. And then I'll be talking a lot about the diligence process that we go through for investments as well in the later slides. So just to note the process of sort of vetting potential investments. So Dr. Oke talked about the way a private equity fund is structured. Venture capital is very much structured in the same way. So you have LPs that give money to the private equity fund. You have the general partner who's the caretaker of the fund, and then you have portfolio companies. But there are differences in the way this is done, and I'll discuss that in the later slides. But the process also is more or less the same. We identify deals, we evaluate whether they're right for us, we do the deal, so we do all the legal structuring, etc. We implement the deal, and then we start the process of value creation. So a private equity fund or a venture capital fund is not only in the business of giving businesses money, but it's in the business of trying to create value beyond what the founders could do on their own. And then after a certain number of years, we try to exit. In terms of private equity strategy, I won't go into all of this because it's too long and I don't have that much time, but just to know that there's different types of private equity funds. And I'm really not like 100% on this categorization. There's so many different categorizations of private equity, but I think that this is one of the more accepted ones, I guess, that looks at venture capital as a private equity strategy, along with all these different strategies, which I'll be talking about in the later slides. But I think, the difference between private equity transactions and venture capital transactions, there are a few differences, even though the lines are beginning to blur now, and you see PE funds setting up their venture capital funds. And I know that one of the major PEs in Nigeria has already set up a venture-focused fund. But the differences between what you would typically see in a private equity transaction and between a venture capital transaction is, the stage. So private equity firms tend to buy more mature companies and sometimes even, like I said, delisting a public company. So usually the companies are more mature than you would see in a VC where you're investing early stage. Sometimes these companies don't even have, none of the companies are making profit. Sometimes they're not even making revenues. Sometimes it's just an idea when the venture capital comes in. So these are very, very early stage companies. And in terms of company types, the companies are usually quite traditional in PE, whereas venture capital is usually technology driven. So technology companies or technology enabled companies or tech first companies usually receive venture capital. Now, this is a really interesting point, which I feel is one of the major differences, right? In private equity, a private equity firm is usually buying a majority stake, a minimum of 50, up to 90, 100. Whereas when you're doing a VC transaction, you can own 0.5, you can own 1%, you can own 2%. But usually you don't have a majority stake, you have a minority stake. And that has all kinds of implications because I think Dr. Oke said something about like this reputation of PE firms for being wicked. As a PE firm, when you earn 80%, you can actually change the management if you find out that the founder isn't acting appropriately or you think that a different skill set is needed to take the business to the next level. You're the majority owner. So you can actually begin that conversation. And that's where the wicked reputation comes from. Whereas if you own 0.1% of the country, you don't really have mouth to change anything now. You just have to manage along with the company and be managing with them. But even sort of when you get together as a group of VCs, usually the entire group of VCs don't own more than 10% of the company for that round. So that's a major difference that I'll speak to later on as well. In terms of size, very different as well. So you see large PE firms making investments of 100 million to I wouldn't say 10 billion, but I would say 1 or 2 billion in advanced markets. In emerging markets, particularly Nigeria, obviously the PE firms that wanted to make investments of that size kind of didn't find enough investments for them to make in terms of because they wanted to make American size investments. But PE firms generally make much larger investments than the VC investments where, even the most famous VC in the world, Y Combinator, how much do they give? They give $25,000. So that's very different from the potentially hundreds of millions that you'd see a PE providing. In terms of structure, that's interesting as well because PEs can use all kinds of structures. In Nigeria, it's a bit different. So in the UK and America, the leveraged buyout is actually very, very common. So putting a small bit of equity and then going to the bank and taking more debt and then using the cash flows of the company to repay the debt. That's because in America, the debt is usually 1%. In Nigeria, leveraged buyouts are a bit more complex because the debt can be like 20%. And the bank will ask you for 80% cash collateral before you can even get the money out. So the leveraged buyout isn't so common in Nigeria, but still you do see private equity firms using a combination of that, equity and debt, but more geared towards equity and debt. Whereas VCs, I've done short-term bridge financing debt transactions in the technology world, but really the mainstay of our investment is equity, and it's very, very rare for a VC to give debt. In terms of valuation, the valuation for a PE firm is actually pretty simple. It's an EBITDA ratio, and it's very difficult to argue with. It's very, very black and white. Whereas valuing a VC company is more of an art. And definitely the standard methods of valuation like DCF, etc., don't always apply, or hardly ever, to be honest, apply to venture capital companies. And you look at other metrics, how fast the company is growing, for instance, what the market size of the industry that the company is tackling is, what problem they're solving, and the skills of the management team, etc., to really come to evaluation. So I wrote as the Lord leads, because sometimes, you see companies that are still loss-making, but they're raising at valuations of, $1-2 billion. So it's actually very different from a typical PE valuation, where I think, valuations are a lot more straightforward, and there's established industry norms within the PE world. So I was just going to talk about the types of PE generally: growth capital, real estate, mezzanine, leverage buyout I spoke about, distressed buyout. We've done a few of those in the PE space for restructuring, turnaround, all of those things. So we've got a few assets out of AMCON that we've been able to turn around. So I'll talk about that maybe in the Q&A as well. Fund of funds, so some funds only fund other funds, and they act as LPs in other funds as well. Venture capital is generally seen as a form of private equity. Some people would argue that it's not, but generally it's seen as a form of private equity, and it's typically allocated to small companies with exceptional growth capacity, like I said. And you know the famous companies that has received venture capital, so companies like Paystack, Flutterwave. So Paystack we invested in, Helium Health we're invested in, Lifestores we're invested in, and then the global examples like Yahoo, Google, YouTube, Zappos, WhatsApp have all received venture capital as well, and some of them have raised huge valuations compared to the revenue and the profits, if there is profit. So I've spoken about the stages of financing before. I won't go through that again. The procedure is quite similar to PE, which I've already described. In terms of how you manage the portfolio, I think that we can kind of skip that. If you want to talk about portfolio management, because my time is kind of going, we can get back into that and talk about the different ways or sort of strategies for portfolio management in PE versus VC. How venture capitalists make money, and this is interesting. So we typically pay, when somebody invests in a VC fund, there's typically a fee that the fund takes, usually 2%, sometimes 2.5%, which is a management fee. Whether the fund succeeds or not, that management fee is taken because they're managing the money. And where sort of the fund managers, the GPs, are supposed to actually make money beyond 2% of the total amount of the fund is the carried interest. So when there is a liquidity event, then usually a VC firm will negotiate for about 20% of the profits from that liquidity event. 80% goes back to the limited partners. And to make it a bit more complex, it's only 20% usually if you hit a certain hurdle rate. So they'll tell you that they want a 6% hurdle. So that means that if you make more than 6%, then you are entitled to your 20%, and the 80% goes back to the people that gave the money to you. And everybody on this call has experienced the effects of devaluation. So they're not asking for 6% in Naira. They're asking for it in US dollars. You can sort of look at how difficult it would be. And I know some of you on this call are familiar with the public market. So look at your favorite banks, look at your favorite sort of companies on the Nigerian Stock Exchange. How many of them in US dollars has given a 6% return? If you look at sort of their financials over time. So VC sounds exciting, but the companies really, really need to be extremely fast growing in Nigeria to be able to outgrow devaluation to the extent that you get over that hurdle rate of 6% and then can sort of get 20% of the profits. Lastly, on this sort of technical side of the presentation, I'll speak about liquidity events. So how do you get that liquidity in the first place? We're going through an M&A procedure now. So one of our companies that we invested in is being acquired by a local player that wants the technology that they have. So that's one way of exiting the company. We exited Paystack when it was acquired by Stripe, an international player. So that's another way. Some, when they list on a stock exchange, for instance, like the Computer Warehouse Group, had a private equity investor invested in it. And when they went onto the Nigerian Stock Exchange, that was a form of exit. Sometimes we do secondaries. And actually, when we invested in Paystack, there was an opportunity, a group wanted to buy our shares. And we decided to hold, and we got a greater return because we held, because Stripe was willing to pay more than that group was. And nobody knew about the acquisition back then, but we decided to hold. But a lot of people sell their shares on the secondary market. A lot of people, because there's a pre-seed round, and then there's a seed round, and then there's a Series A, then there's a Series B. You can sell your shares in any of those subsequent rounds and take your money off the table. And a lot of people do that either in between the rounds or when the round is closing, we express that we want to take our money off the table. And then also emerging, because of this difficulty that Dr. Oke mentioned around exits and liquidity, an emerging sort of conversation is around dividends and how we can sort of use dividends out of the profits to provide some kind of short-term liquidity. And definitely this has been done in America by private equity firms where they lend money against the firm's own balance sheets and pay themselves a dividend. I'm not sure how great that would be for the firm, but you know, the target is actually liquidity, right? Where there isn't that market depth, we have to think creatively around how we achieve these liquidity events. So role of women, and this is my final slide. In 2019, 2.8% of all the venture capital raised in America went to women. And in 2020, that fell to 2.3. So that means that 98% of all funding went to men. And this is something that I think should be on the minds of everybody listening. The fact that there's a pot of money being given out to businesses. And if there are 100 women, if there are 100 people that had access to that pot of money, 98 of them would be men, and only 2 of them would be women. So this is not a slight gap. This is a massive gap when it comes to access to funding for women. So what can we do about that? For any sort of development finance organizations or institutions on the call, or any potential LPs, I think the answer is that people do fund people that look like them, people fund people that can relate to. There's a technical aspect to funding, but there's also sort of a relationship access aspect to funding. So one quick solution would be just funding more female GPs. And I think that when women are the distributors or sort of the fiduciaries involved in sort of making these investments, then they're more likely to fund women. Also, I think that women don't need to wait for the large DFIs or the large institutions. A lot of people are starting rolling funds, a lot of people are starting syndicates by themselves and are doing deals on a rolling fund basis or on a syndicate basis. And if you want to hear more about how to start a rolling fund or how to start a syndicate fund, I'd be happy to speak to that in the Q&A. I also think it's important for women to be part of the institutions that give out the funds in the first place. So working in those pension funds, those DFIs, those hedge funds, because they'll be more likely to fund female GPs. I also think there's some policy reforms that women can advocate for. Right now, it's very difficult for Nigerian pension companies that do have a lot of capital to invest in PE and VC. And we can look at the ways that the Pension Act can be reformed to allow more money to flow into these asset classes. We can also advocate, like we do in Women in Finance, for greater diversification. And we can also improve our skills. If you look at the CFA website, there's still a gap between the number of women that take CFA and the number of men that take CFA. There's still a gap between the number of women that take ACCA and the number of men that take ACCA. So these are financial qualifications that obviously are important in terms of getting us into those positions where we can make these differences as GPs in a fund, as managers of rolling funds, in those big institutions. And I think that it's important for us to, take skills and education really seriously. And that's why working with Mrs. Lawson is such a privilege, because it enables us to sort of bring education and learning front and center. And also obviously taking our higher qualifications like MBAs, like Masters in Finance, etc., just make us more employable, help us up the path faster, and help us get into positions where we can also lift more women up. So for my references, I'll share the slides because there's some really good private equity textbooks if you want to learn more. These are the books to pick up. And now I'll hand over back to our moderator for the Q&A. Thank you.
Thank you very much. Thank you very much. That was really, really educative. I was going to say, I feel like I've gotten an executive education from Harvard, and no less, both of you did go to Harvard, so indirectly we have. So thank you very much. There are lots and lots of questions, so let's get into it. And I want to start first with almost the last point that Dr. Ola Brown talked about, that women, only 2.8% in 2019 had access to venture capital. And you did make some suggestions around how women could increase that access. In recent times, we've been hearing a lot about, the amount of VCs that, venture capital funds, even private equity fund has been raised. What specifically are venture capital firms and private equity firms, depending on who responds, what are they looking for, and what should women do, to get in front of more VCs? How do they get in touch with you, for instance, if they have ideas for their business, and how can they improve the likelihood of them getting funding? So Dr. Enelama first, and then Dr. Labrown.
Thank you very much, Bumi, and Dr. Ola, thank you again for that very sort of robust presentation, and you covered a lot of ground. Well done. I believe that when you deal with things like you have to deal with both trends and levels, the direction of travel. You also have to deal with those things that can accelerate it, which is why I know you're asking the question. The good news, let me start with the good news. The good news is that the trend is decidedly in favor of women. I'll share an anecdote with you. I have a daughter who's schooling in the States who was like trying to decide whether to work for one investment bank or the other. Then I was asking my friend who went to business school many years ago, who is there. And I remember the answer he gave to me. He said, there's never been a better time to be a woman and to be Black in America when it comes to professional careers. That these firms, she will have her pick. And what he was saying made sense, right? Because the trend is there. So the first thing is what I call the challenge of opportunity. Let the women take advantage of the opportunity. The advocacy should continue, but only a person who is not paying attention will not know that there's momentum here. Momentum in terms of entrepreneurship for women, even ourselves. This is good business. I mean, I am in the not-for-profit space. I'm involved in a STEM university, which is being funded by the likes of MasterCard Foundation and others. And they're very clear. I mean, the CEO is a lady, and the MasterCard is trying to fund things in Africa. And it's not just about her being a lady, but the foundation is very clear that gender matters a lot, right? And they say it for well-grounded research they've done. I mean, you know that it's not patronizing to say that getting women involved in things makes a difference. Whether it's in a home, in a business, they bring a lot to the party. I listened to somebody once who said, and I'll stop, that women, probably need to speak up more because it's almost as if the men are more sort of like aggressive in stating their qualifications and sort of trying to grab whatever is available, more entrepreneurial in a sense, I guess. But, the women are steadier, right? I mean, you know what you're getting, and that anybody, so those of us that are giving the money, like Dr. Ola said, we also should take that into account. We should demand, that more women get involved. And so this women in finance thing is a big deal. And I would say that the momentum is in your favor. The women that are here, please take advantage. This is your time.
Thank you. Dr. Ola?
So how can women raise more finance? How can we close the gap? I think that there are two things. I think that there's the technical side and then there's the relationship side as well. And there's a lady who used to work in JP Morgan. Her name escapes me now. She wrote a book, Carla Harris, and she wrote a book called, I think it's called How to Win. And she has a very famous TED Talk. Ladies, please watch her TED Talk. It's amazing. And one of the things that she says is that women overestimate the importance of technical ability and underestimate the importance of relationship capital. I had an experience like this when I first got married, because before I got married, right, I didn't really have any very, very close friends that were men. Most of my friends were women. So this was my first time being in like close proximity to a guy for a long period of time, I guess. And I ran into a business problem and I needed some money like quickly on the spot. So I know a lot of big men in Nigeria, and I called like, oh, can you help me? Can you help do this? Can you do that? And none of them could. And then my husband said, let me try. And he just called one guy in Abuja, one of his guys that owns a fuel station. The money was by the plane in like 1 hour, because men have what they call social capital. They have the way that they go through life, they just make more connections from secondary school to university. That whole set, even when he went to university, that whole set of people, they are still in the workplace. They are still all together. None of them has gone off taking time out to raise their family. All the men that he went to university with, they're still very much on ground. They're still very much in the workplace. And it seems like even though I'm the more social one, I'm the more outgoing one, I'm the person that does the networking, just that secondary school network that he has, somebody is in an NPC, somebody is in House of Rep, somebody is a minister, somebody, just that secondary school, without even making the effort that I'm making, he has a better social network than us. And I think that goes for a lot of women, especially women that do take multiple years out, sometimes 5, 6, 7 years, and they don't take those years out in their 50s, they take out during 25, 35, and that is a very, very active time, career-wise, where men are usually going from meeting to meeting, making connections, and that's the time when we start to, do other things. So I think there's a technical aspect to raising finance, which obviously is getting your data room right, getting all your documents in place, getting your pitch deck right, getting the metrics right, putting your financials in order. If you don't have, I mean, these are small businesses. It's not necessary to, go to like a big 4 company, but not using like Cooley & Sons auditor, at least having, a mid-tier Nigerian auditor to do the audit. Building your financial model and telling a really great story and practicing your presentation skills. These are all the technical things. But like Paula Harris said, there's also a relationship aspect, right? Your network has to be strong. The best time to build your network is before you need it. And the best time to keep your network strong is always. So making sure that even before you need that network, building relationships with Ps and VCs before you begin to pitch, understanding what they need and what they want, understanding their perspectives. And also when you're speaking, bearing in mind that there's some things that women need to do differently. So Margaret Neal is a professor at Stanford University, and she speaks specifically, she does a Women in Leadership course at Stanford University, which is wonderful. You should check her out. She's one of my favorite professors in the world. And she says that if you negotiate like a man, and if you're super aggressive, you probably won't get what you want. And if you notice, a lot of female leaders that have, even in Nigeria, that has been those aggressive types, they don't really, survive that long as more gentle types. Because Margaret Neal's research, and she's researched this over 10 years that she's been a university professor at Stanford, says that women are more likely to get what they want when they negotiate for their society. If you say, this is what I want because I want my career to accelerate, I'm aggressive, I'm ambitious, and that usually turns people off, actually. What she has found in her research, and again, her video is on YouTube, it's free. So I'd advise all the women to watch it. What her research looked at, I think, it's 50,000 negotiation scenarios with women. And she advises women that, look, this is not personal. It's just what the statistic says, that women actually are more successful when they negotiate on behalf of their society, when they talk about the benefits for other people, because women need to be seen as mothers, right? They need to be seen as caring. So when you're negotiating, always talk about the impact, talk up the impact as much as at least you talk up the ambition and aggression, so that you have that balance.
Thank you very, very much. And I actually wanted to point out that point you made about relationships and keeping your network. When I first joined social media, when it started, it was very easy for me to find all my guy friends. The same name, is there, but the women had gotten married. You couldn't even track them down. So the first thing I did on my social media was to put my maiden name, so you have it there, so it's easy to track. So something as simple as that makes it more difficult for some women to be able to get, to build that network. But it's something we need to do consciously. One question was around the regulatory environment. That do you need a license to set up a fund if you want to set up this? What are the regulations around setting up either a VC fund or a private equity company? Are there requirements for SEC, or I know CBN doesn't have, but what are those regulatory requirements to set up a fund? So, yeah.
Do you want me to go first? Yeah, so yeah. I think the short answer is yes, and I say yes, again, from a technical standpoint. Let me explain. But depending on who you're going to raise the money from, how much you're going to raise, you almost invariably will have an interface with SEC. The way, once you have any scheme, any arrangement that involves collecting money from the public or from people, so it's best to work with, as Dr. Ola said, with professional advisors. One general advice I'll give is that, get the basics right. If you're going to do something like this, there's no point in doing it in an unprofessional way, if you know what I mean. It doesn't have to be expensive, but it can be thorough, it can be well done. So make sure you're being advised by the right lawyers and the right accountants and everything, just in setting up. One of the things that helped us when we started, just to share this as an anecdote or as a story, when we started, right, I came back from South Africa where I'd been doing private equity to, link up with my former boss and mentor, Dick Kramer. Dick had left Arthur Anderson where he was managing partner. So we actually worked with the old Anderson, the lawyers are still there today. They helped us study the system, set up everything properly. So we're built on a solid foundation, right? By that time, you didn't actually need technically SEC or or sort of CBN and all that. But it was clear that like you needed, when you started raising money locally, right, that you then needed to make sure that whether it's today they're doing with pension funds, you need to make sure that you know what pot you're getting the money from and why. And the same thing is true even of a place like the offshore centers like Mauritius, for those that want to raise money abroad. Everybody is tightening this in because regulatory oversight is now required by different oversight countries and jurisdictions to make sure, even it's just money laundering alone, right? To make sure they know who is, know your customer, KYC and anti-money laundering rules. So I think the best way to think about it is that, yes, you will do the minimum that is necessary, including registering if it's a fund. Then you register the fund in the type of fund it is, right? Typically with SEC or somebody. And then you find that if you want to raise money from the pension funds, PenCom and all these other people also want to be sure they know what you're doing, yes.
Okay, Dr. Ola, do you have anything to add quickly? Should go to the next question. Okay, great. All right. So in recent terms, in the news, there were some issues around founders and venture capital firms or PE firms about ownership. How can one prevent some of those, pitfalls? Because I'm sure it would have been damaging to both the investor as well as the founder. So how do you, prevent some of those pitfalls, Dr. Ola? What's your advice? You're on mute.
Okay. Yes, I just unmuted myself. So I think that getting really solid legal advice is so important. Like one of the biggest sort of professional traumas I've ever been through in my life was because of a very, very small amount of money that a lawyer asked me for that would have saved me so much pain, like probably like 7 years of pain and suffering. And sometimes now I look back at the money and I'm saying, was it this money that I was trying to save? So I think, getting lawyers involved on the fund side and getting lawyers involved, experienced lawyers that have done these type of transactions before, again, not Kunle and Sons lawyers, the real sort of people that have done, ask them how many transactions, the same way that you're doing due diligence on the transaction, do due diligence on the lawyers themselves and ask them how many of this type of transactions have you done before, this particular type of transaction, because the most troublesome type of transaction in Nigeria is an earn-out, where the founder stays and then they have to reach certain milestones before, in dollars, they have to scrape and reach certain milestones before they can get certain tranches of money released. And if they don't reach those milestones, the private equity firm is able to claw more equity in the company back. And even in America, if you look at the videos on YouTube from transaction advisors, you see that the first thing that when you Google earnouts, the first thing that those transaction advisors say, those lawyers, American lawyers say, is earnouts is very litigious. So you have to look at the lawyers that you're using and say, look, how many of this specific type of transaction have you done before? We did a difficult transaction last year where we were buying a listed company or part of a listed company that was being delisted from the stock exchange. And it was really important for us that the lawyers had done this type of transaction before, not general transaction, but this type of transaction before. So I would say, solid legal advice and really, really understanding on the founder side and on the private equity side, what you're signing up to is important. And then also the jurisdiction is important for the financing side, the jurisdiction where any arbitration will be done, or if there's any fights, where these things will be decided, is important as well. So a lot of people now prefer to have arbitration in a neutral legal territory, like London or New York, simply because in many parts of Africa, both parties don't tend to trust the local legal systems in many parts of Africa, varying sort of legal systems and sort of court systems. So people prefer just to have the arbitration and settlement of any fight sort of in neutral territory as well.
Yeah, great. Thank you very much for that. One question, or some of the questions that have been asked is, how do individual investors also become, investors in a venture fund? So they want to put money in, they want to be even angel investors. How do they do that? How can they invest in a venture fund?
First of all, it is possible, and there's quite a few what I call rolling funds. I didn't explain that. They're also called micro funds, micro VCs, angel investment circles, where they do pool money together in syndicates and invest in certain companies. But it's not the money for school fees that you're supposed to use to do that, or the money that you're going to use to fuel your car, or the money that you're going to use to eat. Because our environment is difficult in Nigeria, and some of these companies do fail. And the advantage of having a private equity firm, obviously, is that that money is spread out across different investments. Whereas as a rolling fund, you don't get that level of diversification. You get maybe access to 1 or 2 deals with your 5K. And if those 2 companies fail, there's a difference in the alignment of interest between the GP in a rolling fund and the deals that he's doing, because he's collecting money from everybody anyway. So he has exposure of 60 deals. It's usually that you only have 2. So, it's very important to understand what you're doing. It's very important to not use money that you're supposed to use to eat to do the deal. I think it's important to be realistic about the returns profile, because even those GPs that you're looking at, most of their money is in fixed income or it's in Eurobonds. They don't put every single penny that they have. They themselves actually stay diversified and make sure that they have different sources of income, and people should too. So I've seen situations where people put like all their savings into one fintech, and it doesn't quite work out. So I think understanding the risk profile and then understanding the sort of level of governance that these micro funds and these syndicate funds and these rolling funds actually have at a governance level as well, and really doing due diligence. I think you have to see yourself as an institution and do the level of due diligence that you would think that an institution would do in terms of checking out their profile, looking at the levels of returns that they have, not getting too excited about their past successes, and really being realistic about the limits of those asset classes, especially if you're not diversified.
Yeah, thank you so much. Dr. Enalama, I know your private equity is for institutions, but how can individuals be part of, a fund, a venture fund? Is it possible in, for instance, an ACA?
Yeah, so the answer is yes. Let me just add to what Dr. La said. A lot of the principles are the same, and I like particularly the words of caution. I think the way to think about this really is that it's best for this, if this was part of an overall planning process, financial planning and estate planning and investment planning, the kind of stuff they teach in CFA. Fortunately, this forum is Women in Finance, where you're thinking in terms of like, how do I plan my portfolio so that, I am able to, because it's really in essence, a form of savings, right? A form of investment for the future. And it's good if that is put in that context. So related to that is also where you get your advice from. The quality of your advice you get is not always formal advice, but please surround yourself with people who give you good advice. I know we talk about networking and relationship capital, but it goes beyond just who can I call because I need money to who do I get my advice from. They say, tell me the company you keep, and I tell you the kind of person you are. So you can imagine somebody who gets his advice in terms of what to invest in from the right investment advisors, if he has to legal agreements, he gets it from the right people. Whether he's paying full price for it or not is beside the point. And then especially on a place like ACA, we have an asset management business that actually works with individuals, right? And they're quite ready and available to work with them to do this kind of advice and ultimately to also direct them in terms of taking a view on private equity funds and venture capital funds called Value Alliance.
Yes, good.
And it's run by a woman, by the way, Eno Atoyobi. Some of you know Eno, right? Yeah.
Okay, fantastic, fantastic. Great. So in the news, we've been hearing all these valuations. The latest one was $2 billion, OPE. Flutter with 1 billion, unicorn. And yet, traditional banks and institutions that we would have thought maybe are more valued on the Nigerian Stock Exchange are not as valuable. How do investors arrive at these valuations? What are the things that are considered? And to add to that is how successful has PE and VC funds been in Nigeria so far?
Maybe I'll make some general comments and then Dr. Lau will take over. I think first is this is part of a broader trend. I'm sure you've heard this thing about how, maybe Tesla is what all the auto companies combined, right? Or, the four big powerhouses in technology are bigger than, even one of them, I think Apple is bigger than the, London Stock Exchange, So this trend where, tech, right? And because of whatever reasons and scalability and, and whatever is being valued at such, premium that over traditional businesses is a global trend. And your question is a very important one of like the assumptions that are there, but it's not a local issue. You know what I mean? It's a technology issue. This view that technology can actually leapfrog and cause such systemic and such, quantum change, right? That the valuation, somebody who's doing something manually versus somebody who's doing it digitally, that are not on the same wavelength. I think that's part of where the argument is coming from. Whether it's true or not, I mean, maybe Dr. Ola can throw more light on that. Then on your question about the returns so far, actually from our own experience, the returns, we've gone through several market cycles. The first 10 years were brilliant. The next 10 years were tougher. And we hope in these next 10 years we're in now, they're brilliant. I mean, I think a lot of it has to do with all those factors that were mentioned earlier around, the impact of the valuation for foreign investments, the impact of the, macro environment and everything. But overall, I would say private equity has delivered, but more importantly, private equity, just has very good fundamentals. Because if you look at those who are in the space today in Nigeria and even in Africa, somebody who is, somebody who is discerning will know that this is a good time to be part of the industry. I'm excited to see like the likes of Dr. Ola coming to play and doing so with a lot of enthusiasm and passion and bringing what they know elsewhere, right, to be on the industry. I don't know if you know, I'm sure you know Dr. Mobola Johnson, who started from consulting, and she's in tech today, right? She's been a minister. You can imagine somebody with that amount of experience can only be good for the industry, for her to be in the venture space, and that's what she's doing as a day job. So the industry is attracting some very good people, and many of them are women. So this momentum is real.
Yeah, thank you very much. An interesting question here about pension funds and their ability to invest in PE or VC. What do you think? Do you think they should be allowed? Should they be expanded? What, is that a viable option for pension funds to actually invest in for economic development?
I think there's a very good reason why pension funds are conservative. It's not because they are wicked, right? It's because their pensioner is going to come in 30 years asking for their money. I think that the consequences of a pension fund not being able to return funds to old people that have worked all their lives is huge, and they can't afford the ethical consequences of not being able to return that money. So they are typically quite conservative. Also, pension funds can only invest in SEC-registered instruments anyway, for the most part. So that is, a layer of protection. But still, compared to the typical investments that they invest in right now, I don't know, I haven't looked at Treasury bills recently because the rate is even annoying me, but it's like 2% or 3%. So compared to the rates that you'd get in fixed income in certain phases of the economic cycle, because I'm sure we can all remember when Treasury bills were 18%, compared to the returns that you can get in regular fixed income right now, private equity and venture capital are attractive in terms of the return profile, but maybe slightly higher in terms of risk profile as well. I mean, Treasury bills, Euro bonds usually are sovereign risk, and they're rated. Whereas, you're taking a bit more risk with pension, with private equity and venture capital funds. But if you look at America and if you look at Europe, for instance, the major investors in both PE and VC are the pension funds. They're heavy investors in both asset classes because those asset classes are established, they've seen returns over decades. They understand the asset class very well. And it's not, honestly, it's actually safer in America because the financial system is so deep, like that you are able to list on the American Stock Exchange and get, great liquidity. The M&A, I mean, my sister was a lawyer in Nigeria and she wanted to build her career as an M&A lawyer. and they were seeing like maybe 1 transaction or 2 transactions a year. But in the UK, where she is now, there's a whole department of like 200 people, and they're even overwhelmed because there's so much M&A for them to do that. There's too much. Every day, companies are merging, so they have a very active market. So there's advantages and disadvantages. As I've said, the advantages are the higher profile in terms of returns, and that enables them to, obviously return capital a lot easier. But there's also, unfamiliarity with the asset classes and, the macroeconomic factors that act on businesses here that perhaps you wouldn't find in more developed markets. Do I think that pension funds should be less conservative and invest in our asset classes? Yes, but only with the right teams, only with the right governance structures, and only with tried and tested sort of GPs with the track record that gives the reassurance that, in 30 years' time, we're not going to see 70-year-olds lining up outside the pension funds, protesting because they haven't seen their pensions.
Yeah, thank you very much for the detailed response. Lastly, I would ask this question because it's one that is very close to my heart now. I'm focusing on education, education finance. And this question is around the fact that investment in education, and maybe the retail sector has been suboptimal when you look compared to that of technology and maybe health. How do you think we can increase PE of these investments to these sectors? What are the costs for the suboptimal amount of investments in those sectors? Dr. Enalama.
Thank you. Well, you could look at it in terms of the fundamentals, right? Just based on the presentations we've had today. So one is supply, right? So there's a whole supply of opportunities, entrepreneurship, because when you talk about education, you're thinking of it in terms of VC and PE. Then you have to think in terms of for-profit education, right? That is education where there is, there's a private sector involvement as opposed to, education is social, in the social space as well. We've looked at some, and frankly, like you said, the hurdle rates that you need to get to and the scalability you require, we felt that more work was needed, and the same thing about retail. I mean, you've seen what has happened in the retail space. You saw the way ShopRite, for instance, in terms of the malls, you've seen what has happened with some of those who invested in the real estate side. So I think it's just the fact that like some of these things, may be softer, but there is no question. Again, I'm a great believer in looking forward, learn from the past, but think ahead, right? Think forward. And if you think about it that way, there is no question that education will receive capital. A lot of it, because it's at the intersection of this impact, for profit education and just where the need is, the scale of the need. I got an introduction from one of my partners to somebody who is now investing in Nigeria and Africa, who had done education very successfully in America, in North America, right? And he wanted me to meet with him to figure out whether we can work together. But this is a person with an established track record in another market, now investing in our market. You will see that trend continue. So my view is that more will come there, but it's all driven by these factors that Dr. Ola and ourselves have talked about today in terms of just what this space is about and why you need to be careful as well.
Thank you very, very much. In fact, I could go on and on. I was looking at the numbers of participants to see if it was declining, as we ran over time. But in fact, the numbers were going up, a little bit up. So I am sure that everyone is truly engaged. I thank you, both of you, for really sharing your information. But before I hand over to Mrs. Fumi Ekudayo to do the formal closing remarks and thank you, I want to remind everyone about the Women in Finance, that you can always reach us with our email that you see shared on your screen and our website. Type in Women in Finance Nigeria. All our social media uses that same handle. If you have any questions, you want information, you want to join the group, please send us an email and we will respond to you. So now, with that said, let me hand over to Fumi Ekudayo to do closing remarks and thank you.
Thank you so very much, BL. I hope my audio is fine.
Yes, it is.
Really excellent. Thank you so very much. This has been extremely engaging. It has been extremely insightful, and I honestly was looking at the time, I didn't want it to end. But every good program and every good thing must certainly come to an end. On that note, on behalf of Women in Finance Nigeria and Women in Finance UK, I have the singular honor to extend our deep appreciation to each and every participant for finding the time, making the time to attend our very first in the series of our knowledge series. As you can imagine, it's going to be a series. So we're going to be having several other series in future, and we trust that with what you have experienced during today's session, you would again make it a date with us by the time we come up with the next knowledge series. You would also agree with me that we've had an extremely insightful and excellent conversation today. And to this end, we're extremely grateful to our two eminent speakers, very knowledgeable, very insightful. They did not only talk to us from a viewpoint of practice or theory, but they actually brought in their own experience as well within the space to bring clarity to what they were trying to communicate to us. And on that note, and on behalf of the Expo of Women in Finance and entire members, I would love to convey our very, very sincere appreciation to both Doctors Oke Enelama and Dr. Ola Brown. It's quite intriguing to imagine that both are from a medical background and they're doing great exploits. I was quite excited when Dr. Ola Brown referred to Dr. Enelama as the godfather of venture capital in Nigeria. That was really, really apt, and I do agree absolutely with you. Thank you so much for sharing knowledge with us. Thank you for sharing your experience. On behalf of WIFNG Expo and entire members, we thank you both for impactful presentations and very excellently delivered as well. Incidentally, Dr. Ola Brown is also a member at Women in Finance, and we're very happy and proud to have her as our member. Both speakers discussed based on their direct experience, and that really was quite refreshing. I'm sure we've all had a very fantastic time. As has been shared with us, we're just a click away. I know many of us here today, some of us might not be a member yet. If you wish to be a member of Women in Finance, we are eagerly looking forward to having you as our member. We're just a click away. Can you kindly again put on the screen our email address, our Twitter handle, and all of our social media handles? Thank you very much. So there you have it. You can send us an email. You have our website. You can visit our website, and then you can contact us on any of our social media handles. The slides will be shared. I've seen questions around, will the slides be shared later? Yes, you would receive copies of the presentation slides for both Dr. Ola Brown and Dr. Oke Enelama in your email, the email addresses with which you registered for the program. I'm going to leave you with these two popular sayings. For women, financial independence is a matter of necessity, and I'm sure you would all agree with me with the kind of conversations we've had at this session. And then there's also that popular saying that if you teach a woman how money really works, she can change the entire world. And that is why we must all leave our comfort zones and begin to take those bold steps that would enable us to take our rightful place in expanding, our horizon. A lot of perceived limitations, as has been discussed today, and I'm sure that we've had one or two tips on how to handle those limitations and be the best that we can as women in the financial space, as women in the entrepreneurial space, and all of that. So at Women in Finance, we're fully committed to building and developing capacity of women, and we believe that you've had a very rewarding time with us today. It's been a real pleasure having you, and we really, really thank you for being a part of the webinar. Thank you very much. I'll hand over now to BL. Thank you so much.
Yeah, thank you very much. Thank you very much, Mrs. Ekudayo. And I will tell you that, all the members of our ESCO, members of the Women in Finance are really inspirational women. Dr. Ola Brown, thank you so much. I know what the work behind the scenes that we did to get this done and your valuable contribution, Dr. Okena Lama as well. I mean, Fumi has said everything, so I don't want to just keep repeating it, but I just want to also thank all the participants. Keep the questions coming. We will share out the slides, the video, and note that the knowledge series, as Fumi said, is a series. It will be every second month in the quarter. So each quarter, the second month. So the next one will be in November. We hope that you would be able to join us. Before the end of the year, we would also have another networking session that will be strictly for members in December. So if you want to be part of that December event that promises to be exciting, networking opportunities, please join Women in Finance Group. I want to thank every single person that has contributed to this, and those of our participants. I've seen quite a number of names. Everyone is important. Thank you, and do have a pleasant evening.
And we all put on our videos with our speakers just so that, Kubrat can take a picture.
Sure.
Yeah, because I suspect that the minute you say thank you very much, people are going to go. So that's why I interrupted. I'm sorry. Dr. Nella Makobi, please.
Nella, are you there? Maybe he's gone off. Okay.
Okay, he's still here.
Yeah, fantastic. Kubra, please let us know once you've taken the picture.
Okay. It's interesting how we make do no matter what happens, the innovation that's
yes. New normal.
Yes, normal.
I don't know if I hope she's taken the picture. I just took one now, but I don't know if mine is good. Kubrat, are you with us?
Yes, TFS. Yes, I have.
So we're free to go.
Yes.
Yes, you can. Thank you.
Yes.
Thank you
very much.
Thank you.
Thank
you. Bye. Thank
Bye.
you so much.
Bye, everyone.
Bye.
See Clubhouse. We will end this in 5, 3, 2, 1. Bye, everyone.
Bye.
Bye, everyone. Yes,